Welcome back. Oh, saving money on mortgages. I tell you, everybody wants to do it, especially right now because rates are pretty much at all-time, never-seen lows. I am not repeating yesterday's show. I am not a broken record. It's happening again. Dana Peterson joins us. Now, Dana's a highly requested public speaker, and prior to working with me at Cobalt Mortgage, he actually owned a successful independent mortgage company. Welcome, Dana.
Thanks, Ben. Thanks for having me.
Yeah, I'm glad you made it. I heard that, the car, the remote thingy guy.
I'm full of excuses.
Actually, well,
it was close
up. Well, you said what? I mean, the battery in your car remote dies. What I mean, it kills your.
Yeah, that's all it takes.
That's all it takes. And then you can't get into your car. How'd you get in?
It eventually worked. I stood around the car for 10 minutes, punching the button, and it finally worked.
You're like the guy who's trying to get up and down the elevator, just keeps hitting the button.
Yeah, it just took that long.
Like it's going to come faster. So, Dana, I want to talk more about FHA Streamline Refinances because people who have FHA loans have kind of been hosed over the last 5, or I guess 2, 3, 4 years as rates kind of came down.
Yep.
And now I guess the hosing is over.
Well, for some FHA homeowners. So basically, the rules, the changes that have come out are for homeowners or FHA homeowners who have had loans that were what FHA uses is endorsed before June 1, 2009. So this kind of falls in line with some of the HARP rules, that if you took a loan before this time, that most likely you took a loan at the point of the market, or the highest point of the market, and now we're going to do something to help you take advantage of these lower interest rates.
So this is kind of the key. It's not every FHA loan. This is something you had to start paying this loan in basically first half of 2009.
Yep, prior June 1, 2009. So it's for older FHA homeowners. So what has happened and the changes that have happened, so as FHA took on a lot of losses over the last 3 years because of the housing market and the drop in values, is they've had to increase their mortgage insurance rates. So the typical homeowner who's gone out, let's say in the last year, try to take advantage of lower interest rates, they may save $250 or $300 a month, but by the time all the insurance rates are stacked back on and increased on them, they may only see $50 or $80 a month of savings. And does that really make enough sense for a lot of people to go through the process? So now the changes that have come out now is they said that if you're prior to June 1, 2009, the upfront mortgage insurance, I'm going to use a couple examples here. So
Sure.
Let's just say an average home is $300,000. Your upfront mortgage insurance was 1%, or $3,000 would be tacked onto your loan for the mortgage insurance. Also, what has happened is the monthly mortgage insurance increases. The monthly mortgage insurance has increased. So you went from a 0.55%, or on a $300,000 loan is $137 a month, to now almost $287 a month. So you see the savings start to go away just in the increase in mortgage insurance.
And that's because, in FHA's defense, you have a whole bunch of defaults. Somebody's got to pay for it, and that's
Absolutely.
where they start bumping it up.
So they've gone back to the homeowners and said, if you made your payment on time, you've been in your loan now for 3 years is basically the rule. We're not going to charge you an upfront mortgage insurance fee. Or at least they've reduced it from the 1% to 0.01%. So on that same $300,000 loan, it's just $30, not $3,000.
Big difference.
They've also gone back and said, we're going to keep your old mortgage insurance premium in place. We're not going to use the new higher value. We're going to keep your old. So your current monthly mortgage insurance premium will stay the same. So really you're talking about now taking a new FHA loan that your new loan balance is your old loan balance. You're actually going to be able to take advantage of this interest rate. So the interest rate savings actually ends up in your pocket. That's really the main thing that we're seeing here.
So what happens really is people who maybe, and the reason I say people got hosed who had FHA loans is exactly what you said. Mortgage insurance went up so high, even if you got a lower interest rate, your payment was still higher.
Absolutely.
Because you have that a bigger number tacked on.
Someone has to pay, and everybody has to pay.
So now, when people refinance, they get to keep their mortgage insurance premium monthly payment that same number, which is vast savings from what it could have been.
It more than doubled. If you try to do it right now, it's more than double than what you previously had. And then reducing the upfront almost completely. So you're not tacking that big chunk on top of your loan.
So people couldn't even get this done previously because it was just too expensive. It didn't make sense.
Well, and with FHA, you have to qualify with a certain savings to even qualify for the Streamline program. So if you don't see a 5% payment savings, you actually don't even qualify to do a Streamline loan. Now, the advantages of a Streamline loan is we don't verify income. We want you to have a job, but we don't. If your debt ratio is high, we're not going to look into that.
You've already been making your payment on time. Yeah. And it's still the same house and still the same loan. In some way, that kind of makes sense.
And then the other thing that held people back is I think a lot of people are afraid that their home's upside down now and there's no loan program for them. Well, most of these streamlined loans have no appraisal. They know this. You're making your payment on time. Let's just lower your interest rate.
So it really puts people in a position to take advantage without the strings aren't attached like they used to be.
For some FHA.
For the FHA homeowners
right.
from 2009.
Right.
And there's a lot of them out there though, because, well, I mean, that was kind of the end of the 100% loans, the 80-20s everybody was doing.
Well, prior to 2009, they basically had a zero down purchase program through FHA, through a gift program. You know, they got rid of that in, I think, in 2008.
I remember that program. The go find the seller to pay part of your down payment and will basically legally.
Yeah, so a lot of these people are currently upside down in their home.
Yeah.
You know, but most homeowners we talk to, they want to keep their home. They get it. They bought at the peak of the market. I'm fine with that. You know, we're starting to see some of the markets turn around, and I think people are okay with it. Just, I'm making my payment on. I'm doing all right. Why aren't I getting anything? Is what they say.
Sure.
So now with programs like this and HARP coming out, you know, we're finally able to offer good homeowners a reduction in interest rate. So these are good programs. And when you really look at the bigger picture of this whole thing, you know, if we look at saving millions of homeowners $200, $500, $700 a month, that's billions of dollars in the economy. So these are really, really good programs we're coming out with that will help a lot of people and really help us all in the long run.
Yeah, and I think you make a really good point in that, you know, if the programs are available and you get the lower rate, it's really good for everybody.
Absolutely. That's a stimulus plan. That's a lot of money in the economy. And the other thing it does, it stops these foreclosure rates. It slows it down. You know, and I'm not an economist by any means, but I don't think we're going to see real recovery until we see this housing market really stabilize.
I wouldn't say you're the only non-economist that says that, Dana.
I'm stealing that from somebody else, too.
I would say so. Like half the people on TV.
Yeah.
We're here with Dana Peterson, mortgage planning specialist, with me over at Cobalt Mortgage. Dana, we just have about a minute left before we have to go to break. Are you seeing people start to want to take advantage of this? Is it gaining momentum?
I think the difficult thing with FHA homeowners is they've tried and it didn't work. And so the hard part is getting the message across that try it again, because now it's there for you. And again, it's for older FHA homeowners.
Well, not age-wise.
Well, yeah.
You could be young.
Loan.
You could be middle-aged and do this.
So it's just getting the point across. Try it again. You know, we see already they don't get it, and they've tried it, and it's hard to get that point across that these are the changes, and just make another run at it and see what it really can save you. Because anybody who got a loan before June 1, 2009 probably has an interest rate of 5% or higher, even into the sixes.
Yeah, and we've seen it where you can actually do the loan, doesn't cost you a penny, and it's at like 4% or maybe a little above.
Yeah, absolutely.
Perfect. Well, hey, Dana, thanks so much for joining us. Stick around. Heather Moore is going to join us. She's going to ask us some questions. We're going to try to answer them. And it's really going to have to do with, hey, how do professionals really handle themselves? Because that's a big key to what we talk about every day. We'll be right back after this break. That's Dana Peterson. I'm Ben Brash, and you're listening to Brashenomics.